The housing affordability crisis has finally reached a breaking point. We're now starting to see individual housing markets have significantly reduced demand. Local buyers can't afford housing, and out-of-state buyers have almost completely disappeared. Additionally, Redfin CEO has come out publicly and said that large institutional buyers, just like Redfin, Opendoor, and others, are starting to crash the market. These institutional buyers, or iBuyers, are flooding the markets with massive amounts of inventory at the same time that demand is just drying up, and they're putting the homes on the market at extremely low prices to get them to sell. This is forcing many sellers to drop the asking prices of their homes just to get it sold. Now, this is especially true in a few markets in particular where we're seeing massive increases in active listings as well as massive increases in price reductions. And in some of these housing markets, more than half of all sellers, more than half of all listings are slashing the prices of their homes just to get them sold. And now this is really the indicator that the housing market crash or the bubble is popping, and it's starting with these markets in particular. Now I have a great article from Realtor.com that talks about housing affordability and how that's changed over the past 2 years. But before we jump into that, if you guys could do me a huge favor, smash the like button. Don't forget to subscribe to my channel so I can keep bringing you great content like this. All right, let's get into it. All right, so let's take a look at this article from Redfin.com. So the title is "The Typical Income of a Boise Homebuyer is 24% Higher Than Before the Pandemic." And this first paragraph here sums up the article pretty nicely. Homebuyer income soared in pandemic boomtowns like Boise, Austin, and parts of Florida, largely due to remote workers moving in from pricey job centers. Housing markets in many of those places are now slowing down. So this article is finally pointing out that we're starting to see a slowdown of migration from high cost of living areas into low cost of living areas. And I think that could be for two primary reasons. First, the people that wanted to move have probably just already moved. They've had 2 years since the pandemic began. And so many of those people probably that wanted to move have probably already done so, especially after their jobs have converted from 100% in person to now work from home or maybe some hybrid model. And then reason number two is the home prices in many of these areas have just skyrocketed so much where people don't want to take that risk, where it's not as valuable for them to move from a high cost of living area into, a Boise or an Austin, Texas, because those areas are also very expensive now. And many of these home buyers smartly may be actually worried about a housing market crash in those specific areas. Now take a look at this chart here that details where the top 10 metros are where homebuyer income grew the most during the pandemic. And you can see here the top row is Boise, Idaho, where the median homebuyer income grew 24.1% from 2019 to 2021. And the median home price appreciated 53%. Now, I can tell you this 24% number is definitely not normal. You would expect in a normal year with normal inflation and not pandemics or anything like that, you'd expect the income to grow about at the same rate as inflation. So in any given year, that might be 2 or 3%. Of course, over the last year or two, it might be 7, 8, 9%, but definitely not 24%. And so what this is telling me is that there's been a massive amount of people that have migrated into Boise and brought much higher incomes with them. And so this was a massive driver in this home price appreciation. And you can see a couple other really egregious markets here. Austin with 19% income growth and almost a 58% appreciation. 3 or 4 markets here in Florida. Phoenix is another really big one, 16% median homebuyer income growth and 48% house appreciation. Then you have Stockton, California, Tacoma, Washington, and Salt Lake City, Utah. So a number of markets here where we're just seeing massive increases in salaries that are largely driven by out-of-state home buyers that are moving into these areas. And then this is what's driving, or this is what has driven up the prices of many of these homes. And of course, for any of you that follow my channel or have been following the housing market regularly, you'll know that those top 10 markets pretty closely correlate with the markets that are most likely to be overvalued. And that's because people in those markets just can't afford the homes, especially the local buyers. And now that we see this demand for homes starting to dry up, as people aren't really moving anymore as much, bringing all these high salary jobs with them, we're really starting to see these prices start to come back down to earth. And this paragraph here really does a good job synthesizing that. While local incomes rose and home prices skyrocketed in 2021, housing markets in many of those pandemic boom towns are faltering as high mortgage rates and unsustainable price growth tame demand. Migration into both Austin and Salt Lake City, for instance, has slowed significantly in 2022, largely because out-of-town buyers push prices up. So now we're seeing that migration has just really slowed into these areas. I mean, if you think about it, it makes a lot of sense. People just aren't willing to get a 6% mortgage on a home in an area that has seen, 50 or 60% appreciation just over the last 2 years. It's a hard thing to do to buy in at such a high mortgage rate at massively inflated prices. And so I think that's a big driver why a lot of people are just not moving to these areas anymore. Now that we touched really on the demand side here, I also wanted to talk a little bit about what's happening to supply. I mentioned earlier that the Redfin CEO had mentioned that iBuyers are contributing to crashing the markets by flooding these markets with inventory. So I want to make sure to show that little clip to you guys as well.
I think on one hand, you've got places like Boise, Salt Lake City, and Denver having more than half their listings drop their price. In Boise, it was 62%. The iBuyers are just ripping the bottom out of the market because we have to price ahead of everyone else to liquidate our inventory. So that has made the correction sharper, but hopefully more short-lived than anyone expected.
So you heard it there from him directly. They're having to price extremely aggressively just so that they can sell through all this excess inventory that they have on hand. So this is really impacting a couple of these markets where we're seeing massive increases of inventory dumped on the market because these iBuyers are trying to get out from under them. And I'm sure a couple of you are sitting there nervously wondering which markets those are, which ones are most heavily impacted by iBuyers. So take a look at this chart here so you can see exactly which markets that the Redfin CEO was most likely talking about. So these are the top metros for iBuyer market share in 2021. So you can see that by far the biggest here is Phoenix, Charlotte, and Atlanta, Georgia. Then you have a couple others throughout Florida, Vegas, Texas, Tennessee, so sprinkled all over. Now I've been poring over the Redfin real estate data for the last couple of weeks, and I wanted to highlight some of these trends that are happening in a couple of these markets. Boise in particular, that is really, really interesting, and I think points to exactly what's happening, that Boise is either on the cusp of a crash or definitely within a correction or a full-blown crash. So again, this is from Redfin, and just starting off with how this chart is oriented. So I have 2019, 2021, and 2022. 22 obviously is the line in the black, orange is 21, and blue is 19. And you can see this is for new listings, and you can see, these all have flowed pretty much similarly each year until 2022. Back in June, we just saw this absolutely massive spike in new listings. And I think really what's going on here is people see the writing on the wall. I mean, anybody who's on the fence about listing their home, or maybe investors who have multiple homes in the area, know that this is the peak of the market. And if they want to get top dollar for their home, they're going to have to sell now. Otherwise, it might be another couple years until their home appreciates back up to the same prices. And you can see all this data flow through into this active listings chart, where you can see, active listings were massively below where we were in 21 or 2019. And then this massive spike in correction here to where in a couple of weeks, active listings are probably going to be higher than what they were in 2019, so pre-pandemic. And median days on the market as well is starting to increase. I mean, a couple of weeks ago, homes were selling within, a week or two, within 8 days, 10 days, and now homes are now on the market for more days than they were in 2019, averaging 22.2. And this is leading many sellers to reduce the price of these homes and reduce the price of the listings. And this is probably one of the most egregious ones that I've seen of any of the markets that I've been paying attention to and looking at. But you can just see here that this is totally abnormal, and sellers here are just desperate to sell their homes. They're trying to get top dollar for their home, and a lot of the demand has just started to dry up as local buyers just can't afford these homes anymore. and as out-of-state buyers just aren't interested in moving in anymore. The value proposition just isn't quite what it used to be of getting really, really cheap homes in Boise. And we're starting to see that reflect in the data. And I think really what we're going to see next is listing price and sale price of these homes is going to start to plummet over the next couple of months or maybe a year or two. All right, guys, that wraps up the video. I really hope that you enjoyed it. I hope that you enjoyed the analysis and thought that I put into the video. So if you could do me a huge favor, don't forget to smash the like button. Comment down below if you have any questions or if you'd like me to do a deep dive on any market in particular. I'm happy to spend a little bit of time researching those. And for any of you that have not yet subscribed, please consider doing so. It would really help me out a lot. And I will see you guys in the next video.